Good afternoon, traders. This is Christian Promhertz, Tribeca Trade Group, and today is Wednesday, July 29th. So we've got theme of the day in the middle of the screen over here is some more events of the week now in the books. I mean, this is one of the busiest weeks that I've seen in a while, where you have FOMC, you had the tech dudes that are in front of Congress this week for like I've said, I don't really think anything comes out of this thing. I think they try to take a hard line anytime there's one of these congressional hearings, but they never come out with anything. But who knows? Maybe it'll be something different, because it does seem like they are in the spotlight. So that's one thing I would say is a risk for the big tech companies is possible regulation. But I made a joke earlier about like how many Prime memberships Bezos got signed up today by congressmen. So anyway, I'm joking around here, but that's in the books. FOMC, which I think for the most part, we listen to that as well as when these guys are in front of Congress. But it sounds like basically they're maintaining course, and that's what I thought. As we talked about in yesterday's video, I didn't think there was going to be any change there. But as always on FOMC days, you see a little bit of whipsaw action, especially during the testimony, the Q&A that Powell speaks at. There's always, I never really chase any moves on FOMC. I've just kind of learned that, mainly trying to take some profits into that, but we managed to kind of hold up pretty well. If we look at the performance for the day, the one that was the best was IWM, was up 2.2%. Again, this market kind of keeping us on our toes. There's something, it seems like, different every day that's outperforming, and we're continuing. If we go to the S&P, right, so Qs, we'll put this in green for the day. The Qs were up 1.1%. SPY's right in line with that, up 1.1%. And if we look at the charts, and by the way, the VIX all the way down to almost below 24. So, that continues to kind of, we continue to see a movement down for now in the VIX. And if we go to the S&P, I joke around about this when I sent out the Tribeca Trade Group morning note. I talk about how there's really not much for me to overanalyze here in the daily chart, that other than we're exploring a range and we're bouncing around a little bit like a pinball. And the way for, bottom line for trading, right? For us, it always comes down to trading. I know some people on Twitter and so forth, they want to be right. They want to make a point. I'm not here looking to make a point. I'm looking here to make money. One thing that I see here is that if you're selling the rip and buying the dip in this range, it's working repetitively for you. Now, we will eventually bounce out of this range, but for now, you could see it taking place. And the more that you're savvy with this, and rather than chasing green, selling into green, and then buying that dip yesterday. I mean, yesterday the market went right, straight down after 3 o'clock yesterday. So you kind of had to, hold your breath and basically buy, which I didn't add anything at the end of the day yesterday. But that's, hindsight 2020. That's basically what is really working, is selling the rip right now and buying the dip. So I would like to say it's something that I can come up with some major analysis here, looking at this S&P daily chart. I know some people like to do that. They like to, here's where we did this and here's where we did this. We're just exploring a pretty tight range. And we are, like, if you use the 1 hour value area, which I do use quite a bit. We talked about this yesterday, how we've basically came back and retested this. This morning, this was at 1 o'clock in the morning. We broke below and on light volume in the overnight session. But we're back, we're back basically in the highs of this week, not above last week's highs, but basically right in the middle of the range of the last 2 weeks. And that's all. I mean, if you really want to analyze it further, I guess someone else's video will probably do that, where you see these guys try to really split hairs with analysis. I look at levels, and I basically say, hey, this is a good level to trade against, and then try to be savvy and basically, don't chase unless you've got a nice level to basically trade off of. Qs, we talked about this 257 level, maybe a little bit of a double bottom short term, but we're coming into right here, and really, I wouldn't be surprised if we gave this back a little bit, and I also wouldn't be surprised if we rallied. I'm pretty much, taking this market for what it is right now. We've got a bunch of events tomorrow. Tomorrow is Thursday, where all the big companies report after the close. I don't know why they stack them up that way, but glad to see some of the names got out of the way, like PayPal, which I'll show you. But again, tomorrow it's Apple, Amazon, Google, and Facebook. You got to be kidding me, right? But perhaps also that's why we're trading in a range. Could have something to do with people who want to see how these names move. But I'll tell you, there's some really interesting moves. The Corvo is up to one, and I'm on the 1 hour chart, but it's up to 127. Some of these semiconductor names kind of following what AMD did. Qualcomm all over the place. Qualcomm went down to 89. We talked about in the room how they've been buying calls left and right in this thing. This thing's up to 104. So, and the range was really, speaking of ranges, the range was really tight in this Qualcomm. So, of course, they had to have put out something good to break out of it, but it's a good pattern to recognize because this repeats over and over. When a name is bunched up like this, that's more or less when I want to play an option trade, is when you get really bunched in together option activity. PayPal, we put together a couple trades. PayPal is up to 187, so good results. I really like the chart of PayPal here as it kind of took that next leg higher. But again, this is not a cheap stock. Someone asked me on Twitter today, I put out the numbers for, select companies and I throw them out on Twitter. And somebody asked me about Spotify. They said, I don't understand, why is Spotify down? Well, have you seen what Spotify's done in the last month? So Spotify was fine, finished down only 1.8%, but I'll tell it to you again that if a name rallies 50% or something like that in a month or two, they're going to have a perfect quarter. Perfect, right? So ServiceNow, I'm still waiting to see what they said on their guidance, but ServiceNow, which is traditionally a very good company on earnings, I didn't see what the guidance numbers, but you could see how well ServiceNow usually reports after the close. They are down after initially going higher. They're back to 425. We put on what did I do? I sold premium for this one. So I'm going to need to see this thing get above 430 for my earnings trade that I put on. But yeah, I would like to see a little bit more. What did they say that brought them down here? Something about guidance, but I guess I have to read through it a little bit more. Forecast update, I guess, was a little bit less than expected. My trades here, again, full transparency. I always show you what my trade blotter is in here, unlike most fellow Twitter traders who don't do that. But did quite a bit of trading today. I did very little yesterday in the realm of things. We do a lot of trading, here, and a decent amount of scalping. And I do make attempts at trades. But, yesterday I thought was just too difficult. So I didn't, I kind of, after 1 o'clock, I really didn't do much other than a couple earnings trades, yesterday, of course, which I'm going to take some shots on some things. Twilio was a pre-earnings trade move that I was looking for. I took this trade off. So again, not being super greedy. Would I like to get on a $10 wide call spread? Yeah, I would like to get maybe $7 or $8, but I'm cognizant of how this market is moving right now. So happy to get almost a double on our pre-earnings trade for Twilio. So nice move there. What else? And then, of course, I took a little bit of trades off into the strength today. And one name I had on that I put out on a trade ID on Twitter earlier in the week was DuPont. They report earnings tomorrow. That's not a trade that was set up for earnings. So, took that trade off. Here is the PayPal trade that I put together. I sold a put spread, so credit put spread, so I'm collecting premium there. That looks like it will work. And then I need PayPal to get over, which I don't know if this is going to work yet, basically right at the strike. So anything above 187.5 works. TDoc. We also did an iron condor for this. Interesting how this works. Take a look at the VPOC being taken out here on our Thinkorswim charts from our study. So do you think, I show these version point of controls all the time. I don't think people fully grasp how accurate these things are, but here's the version point of control. This thing touched this thing and took it off. So, I mean, it's this, the market webs indicator that we use amazes me just about every day. Here's a good example of something, being pretty amazing in here. But interesting, Teledoc now down 209 here. We talked about most of these names. So, yeah, I'll need a little bit of push from ServiceNow. And, here's my trade for ServiceNow. Da, 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 da. Here's PayPal. Oh, maybe I left it. Oh, here it is, right here. So again, I like selling premium on earnings. Right? I like to be more like the bookie, more like the house of the casino by selling premium. I do need this to get above 430. So let's hope they say something nice in the conference call that can get this thing back above. Notice the VPOC, by the way, the consolidation at the VPOC over here. Funny, again, how that happens. All right, so that's it, guys. Again, my plan is, to kind of continue to kind of profit off the range that the market is giving us and not being greedy. I think a lot of times, really, that's what it comes down to in trading. Is what's the saying that Kramer says? Bulls make money, bears make money, but pigs get slaughtered. And I think during earnings season, I think that saying really, it works very true for me because I think earnings season is difficult to swing trade, and I think that's why we're exploring around, the range that we're in. Just to kind of show you the rest of the sector performance, again, interesting stuff. I talked about, in the room that I did not chase pot stocks yesterday. Look at what pot stocks did today. They gave it all back. So again, people go nuts on Twitter when they see Tillery calls or CGC calls. You can get them to work, but you got to be super quick because these things are in downtrends. They bounce and they go back to the downtrend. Could they eventually get out of the downtrend? They could. Biotech, kind of a question mark. I got some questions about this. I don't know why biotech is weak. Could be because of this drug pricing that's going on. I don't really know why they're not participating. Could just be that there's more attractive areas in the market. We are seeing some consolidation, right? We talked about that I wouldn't be surprised either. I still wouldn't be surprised. If we get bad earnings tomorrow, I wouldn't be surprised that the Qs come down to the 50-day moving average. Again, think about these ranges and where things can go because something like biotech, which looked great 2 weeks ago, is now revisiting support and top of value, and we'll see if that level holds. All right, guys, thanks for watching. Have a great night, and see you tomorrow. Big day tomorrow. Big day.